Hi, everybody. Thanks for joining me. Let's get going because we've got a lot to get through. First off, let's just have a quick look at the data that's coming up. And we have UK jobs before the markets open tomorrow, 7 a.m. UK time. Some Chinese data. That US bonds 3 hours before the markets close tomorrow is going to be interesting. And then we've got UK GDP on Wednesday. We're looking for zero growth, complete flat number month on month. So this is a busy week. We've got US inflation on Wednesday as well. We've got Fed rates, and the overall market consensus is that the Fed will not reduce. That'll be a surprise if they do. So I'll be looking at what happens at the press conference and looking at how the market reacts to the press conference on Wednesday. So not getting too active this week. In fact, I have shorted the highs in the S&Ps. Talk about that in a minute. And Thursday, more US inflation. Yeah, we've got Bank of Japan meeting on Friday as well. Now, Japanese GDP came in at minus 0.5% again, quarter on quarter. So there's problems out there. What I'm starting on is I'm starting to look at the S&P monthly because what I want to do is just talk through what a crash, what a significant pullback might look like. So. Yeah, on month on this S&P, we are, wrong color off from the pen. Let me just work out how to sort that out. Oh, got it. Okay, let's go for a red. So we've got divergence on the RSI. Now divergence on the RSI can work just as well as MACD. So we've made new highs here, and on the RSI, we've made a lower high. We've got volume potentially pulling off. So we're coming up on lower volume. These are the kinds of signals you need to look out for. And if we have a lower close this week after Fed and inflation, then this could be the time for this markets to reset. Now, bear in mind, we are fast approaching summer doldrums. Selling may and go away. Well, here we are on the 10th of June. With some very divergent signals coming in on these basic indicators. Bear with me 1 second. Oh, I know. So let's have a look at the FTSE. Stick to this monthly chart. And you can see we are potentially going to, if we stay here into the back end of the month, and we're not even halfway through the month yet, if we can't close above last month's close in the monthly chart was 83.20. Let's mark that. So if we subsequently close underneath this 8,000 mark, then expect this market to dip down. Now, the other thing I really like to look for is three touches of the highs. So last month we burst through that resistance. Let me just check that is okay. So I'm taking that from Feb 22 high, Feb 23 high, and we have just narrowly missed it on the May high. If I enlarge that, you can see we've missed it on the May high. So if these markets can't hold these highs, then we are in for a correction. Now let's look at the wave count. Lost my pen again. God. Right. So we've had let me pull back a bit more from this. Let me drop this back again. Right, so this is ranged. These are ratios from basically the COVID move. FTSE monthly chart fibbed from March 2020, the first lockdown, to Feb 23. Actually, I'm going to drag that down a bit further. No, I will leave it there. It's not that much different. So I was going to bring it down to the Feb 22 highs, but no, I will. I will. I said it's going to be a Feb range. Let's do a Feb range, Fed COVID range. Okay, that's interesting. That fits in very, very neatly with this latest high. So the low of March 2020, the high of Feb 22, we broke up March 23, pulled right back into the end of 23, and then broke up into that extension. 84.95 is that extension right to the pip. So if we close lower here, and subsequently break under 7,700, then we're going to see a significant correction. So if that is the trend line resistance up there on a monthly chart, let's look at the monthly support. So taking the highs from May 18 and the lows of October 22, we could dip right back into an ambush of 6,500 at least. 6,500 will take us back here to the top of this grey zone. All right, so if we do that on back, let's go back to the S&P a moment. If this S&P monthly, let's draw the trend line resistance on this S&P monthly. I'm going to take it from August 22, go right up to the most recent highs. So the extension on this, on the same, very, very similar period to the FTSE, we still could easily make 55.40 on this S&Ps. So we had a very nice, last month, we engulfed April and made a new all-time monthly high. So there is still potentially some momentum in this market, but if we can't get up there and subsequently close underneath this level, then, like I said, I'm short from 53, 54, literally just about break even. Nothing more than that. I've got a very tight stop on it because this is just initial lot to see if that can drop under 53.50 into today's close. Let's come down the timescales to the weekly. You can see the trend line, 3 touches of a trend line up there from March 24, May 20th, week beginning May 20th, and last week we tucked underneath that trend line as well. So we made a new weekly higher close on this S&P. If we now engulf that this week and close under 52.80, then that's a decent sell signal and to warrant further shorts right back to and we could come all the way back to 48.20 and still be within this support. That will be December 21. So for this to be a real rush to the downside, a real corrective phase, we need to close under 4,800 on this one. But if you look at the wave patterns to the upside, it's been incredibly bullish. So I need to be careful with these shorts and make sure I don't um, get too bearish on this. So you can see from let's take this. I'm just going to do a wave count on this S&P. Um, right, okay, let's get the pen back. So we have had a wave one, then you get a three. That constitutes to me a major wave two. You get a three-wave pattern in a wave two pullback, comes into support, and then goes off on a major three, four, five. Now you got three of 5 wave moves inside of that, which is very, very common in the Elliott wave, which is why Elliott wave is tricky. But once you get used to it, once you practice it, you can see where I'm coming from. And so more up to date, we've had a 1, 2, 3 wave move up there, or back into this support here, and then gone on a 1, 2, 3 wave move up there, another 1, 2, 3 correction, back into support, and then we do this fantastic move 1, 2, 3. So if this is if this short wave 3 fails underneath that trend line with divergence in the volume and the RSI, then and would subsequently close under 5180 on this S&P, then I would suggest that we could easily boomerang back to 4,000. That's the bearish case. If we do a pullback into 5180 and hold, then we can easily go back to that extension up there at 5640 area easily. So because we're divergent, I am selling into this resistance. And looking to see, I think this is a really important week with inflation, UK jobs, Fed. This is a very, very busy week. So also, if you look at the 4 hour, let's look at the daily. This is fib to the last range from April 24 to 23rd of May. Now, non-farm payroll on Friday, we closed lower underneath this May 23rd high. So there's so creeping into the technicals on this S&P is the potential for this to really start to fall back. And I repeat what I've been saying quite a lot recently: sell in May and go away. It's as old as the hills, that saying. I'm sure you've heard it many, many times. So if there is significant profit taking in this market and we come out of this triangle pattern, this flag pattern, then expect a decent correction. If we can hold this 53.50 or last week's support or the current trend line support 5,300, then we can push back up and go to that 54.70 area and more. Okay, so crucial area, a lot of data, busy week. So that's the backdrop to where we are at the moment. Now let's have a look at where the FTSE finished today before moving on. seeing as I think we are all right. Okay, so the FTSE has fallen back into this end of May support and held. With jobs literally 13 hours away. Jobs data. So whichever way we come out of this area here, if we can close above 82.50, we could be going back to the highs and beyond. If we close underneath this 8200, then expect a significant pullback. Right, now the other important thing is let's have a look at the DAX as well. And bear in mind the Germans reduced rates, the Europeans reduced rates last week. Here we are with the German DAX with a rate reduction, still having a series of lower highs up here. So I don't think, I think basically these markets just need, I just think it's time for these markets just to pull back. I don't, we're seeing, these markets are seeing issues with volume, divergence. RSI is not, RSI on this one is even under the midline. And we've had yet another lower close. So be careful, be wary out there. And one of the things that's concerning as well is the fear factor, few fear factors, dollar. It's a safe haven. It's still reserve currency, despite all the chatter about cryptos and Bitcoin, etc., etc. If that dollar is sustained here, then we could push higher. We could push into 24 highs and potentially break out to that area there. If this rolls over, we're going to start to close under we're going to start to close under this 104 and then fall right back. So all these markets are on a typical busy week. They're right on the cusp and could go either way. So we need to get more data, need to get this data out of the way, see how the week unfolds. But just bear in mind what I've said about all this divergence up there. Right. So while I'm here, on the flip side, or that weak Japanese number, things like the pound yen are just not lying down. The dips are still getting bought. So this has pulled back. This got extended up here at just over the 200 mark. This has pulled right back to the extension. So at the moment, pound yen looks as if it could go into this 210 up here. So if we break this high, pound yen could still creep up, push up even. Euro, and then we'll move on after we look at the euro. Yeah, so rate reduction last week, and euro is falling off. Okay, so let's a quick look at the pound US and very quickly, and then we'll move on. Yeah, so UK pound US cable is holding up just. So another higher close above 127, and that could get up to that 131. close underneath there tomorrow, and this could fall right back into 123 or even lower. Right, moving on, gold. Um, so so there's the non-farm payroll. Saw this drop hard, but it's fallen right back into May's support. So if gold can hold 23.30 this week, I think these lows are viable. If we see a dip around the 22.90, 23 mark tomorrow, if we can subsequently close above 23.35, we could go and find the trend line resistance up there at 2,500. Okay, if I pull this trend line back, so today we saw a three touch of the trend line, third touch from the April highs. So all we got to do now is close above 23.35, and that could make it potentially make a new high. So that's gold, I think, is a good play this week after that non-farm payroll job. Just get out if we start breaking Friday's low. That's all I would say. Try and pick up a dip, but get out if that breaks last week's lows. Oil. Now these are think about what I've said about the dollar. This is oil is showing incredible relative strength because we've seen a really strong move in the dollar today, and we've held the February 24 support here, and we've had a big push up. Let's put the 50-day average. Yeah, so the 50-day average is up there at just under the 80 mark. So that looks as if that's good for 80. So if you see 75 tomorrow, somewhere around the 75 mark, you if you can get in there and hold it, you could be in for a 500 pip move. That's very good relative strength. Um, Moving across, quick look at commodities, and then we'll move on. Sugar. So I bought sugar a little bit highish. I didn't manage to catch those 24 lows, but I'm in profit. Not a massive profit, but I'm in profit. Um, we closed above the trend line today. I'm looking for at least 15. We're just under the 12 mark. I'm looking for at least 15 and a possible move. I mean, really long term, possible move into 20. If we could get to that higher that trend line, the higher that trend line will take it into 18. And if it really catches a bid, that might do 20. However, on the wheat, I've loaded up a little bit too high on this wheat. Today we saw, I think, 625. I had this grey zone marked on there before I got in at 660. So I've got back in this too high. I saw an intra-week buying signal and took it. And so this is coming under pressure from that strong dollar. So we now need to get back above that 660, 650, 660. Oops. I mean, again, long term, I think we can, long term, I think we can easily get to $8 and $10. But if we another lower close underneath that 615, and we're obviously going to see $6 again. All right, so that's my mistake in wheat. It would have helped. I would have helped myself if I bought the lows into Friday, because then I could have got at least I wouldn't be taking as much heat. Sorry about that. As you said as you saw me post in the room, note to self. Um, these lower volume commodities do tend to dip in the tail end of the week. Why? Because um, this is driven by the futures market, and a lot of people like to go in, a lot of futures traders like to go into the weekend flat because of the leverage and then pick up where they left off on the Monday, all being well. Okay, hot tip. Um, Moving on to, let's just go through some basic stocks. I want to let's look at basic materials. Let's catch up with some of these basic materials. Yeah, now Rio has seen 58.50. This is a potentially brilliant pullback in Rio. So we're sitting back right on top of February highs. So if this zone holds, which it has done today, we've got a little sort of pin bar. It's a flat close, but note how we have come down. This is really bullish. We've come down on declining negative volume. So if we now see a pickup, if the volume now picks up with this rising above the 54 area, I mean, ultimately, if that really catches a bid, we could be looking at 63.30, we could be looking at 70. Wave pattern, we've got um, 1, 2, 3, 4, 5. 1, 2, 3. We tried to do a little mini 3-5 way pattern there on the tail end, but now we've done a 1, 2. My pen's really slow. Come on, pen. 3. This is potentially the end of a 3-wave correction into a lot of support with declining negative volume. So this is very bullish if we can close above 54. Right. Any questions, let me know. So let's keep this theme, Glencore. Yeah, so we're seeing a repeat in this sector is really picking up. Glencore looks good. Gem diamonds. Not looked at gem diamonds for a bit. Come on, where are you? That's picked up off of that floor. Okay, I'm not touching that. Now, man group. Um, yeah, this is. I saw the brokers put in. I, I don't take too much significance from this, but the brokers have put in a target of 325 on this one. So that's certainly, if we hold this 250, I think we can at least see potentially £3. Volumes are not great. We're under the 50-day average. That's got to close above 265 in the foreseeable. You know what? let's just get UK jobs out of the way. But that's certainly high on my watch list TPI cap, no, is very erratic. Stay away from this one at the moment, TPI cap. Right, so I like Rio and Man Group. Elementis, it's been talking about Elementis for a while. That's recently seen 160. That looks like that might want to do a lower, heavier pullback. Right, next sector is healthcare. What was I looking at? I was looking at healthcare today. Yeah, Bristol Myers. Um, we've got a buy signal on 31st of May. New low, close above next day. Hang on one second. I need to clear my throat. Hang on. IBM. Okay. Let me just. So many boxes open. Yeah, I think it's a reversal. There's a gap fill up there at 448. This could still wind its way down. So be careful. We've got trendline resistance up there. Again, I'll give this a little bit more time. But if we fall back into the 40, 41 mark and hold, I'll be very interested in that Bristol Myers. There was a story behind that and I've forgotten it. I'll have to look it up again. Do a bit more homework with this one. That's the most recent move. Yeah, so I'd like to, there's a ratio support down there at 41.20. If I'm going to risk capital on that, I would like to see that lower. Right. AstraZeneca is long since gone. Now GSK hits that 1811. Again, I would be very patient with this one. Let's just clear this chart. That's messy. So we saw a big move on 31st of Jan. So the ratio support down there is about 1560. I would be patient on that one. See if you can see if that slides back a bit more into that boomerangs back to that 31st of Jan. Because that's a hell of a what I don't yeah, that's a hell of a sell bar there. So if that breaks that low, that's gonna tumble back harder. But if it tumbles back to that support and holds, I'm interested. Right. I want to look. I'm going to look at a couple of things, and I'm going to come to your IBM. Let's look at a couple of bellwether stocks. I think I'm going to choose retail sector. Tesco had a good run. That looks lower at this stage. 293 with 305. I think that needs to come right back again. Sainsbury's, that looks lower. Next. That looks lower. Chewy. Chewy's holding up. Lower oil tends to support these travel companies. I, not for me, but I think if that came up to 550, I think that might be worth taking a punt. Next, last, I look at next before. Right now, um, I'm interested in this is just why is National Grid not coming up? That's crazy. Yeah, this is a wild one at the moment. So rights issue priced it, I think it was 645, I think. So it's dipped right back into close to October 22 support because of that rights issue has diluted the value, perceived that value of the stock. So I really want to see that come back into the bottom of that channel and potentially even break that low. I don't know if it's going to happen yet. But I'm just on the sidelines of National Grid. If it starts, if it closes that gap at 940, then I'll have to sit out. But if we can peel right back to 780 at least, if not closer to that rights issue, then I don't know. What's the timing on this, Andy? You must know that. When's the rights issue on that one sorted? I should know that. I'll have to look it up. Things like as seen on screen, ASOS, it's rumbling along the bottom. Terrible looking stock. Um, Capita. Let's look at my cap. I mean, I've taken a small lot in Capita. What else are you guys interested in? See, I need this to close above 1530. Decent volume today, higher close, speculative stock. Just looking to see if that is a recovery stock and can start to punch towards 20. Not got a lot on it, but enough. Right, IBM, BT, of course, yes. Got to look at BT. So I talked about the problem of a stock having a huge spike. So far we've dipped into 124 and a half, gone right back to resistance at 135. Um, and that the volume is just not sustaining this. So I do wonder if that will want to come much, much closer to the 115, 110, 115. If you got a long-term view on it, then just sit tight because I think at some stage, hopefully this year, I would expect this to see 150 plus. In the meantime, it's not happy up here, and this could do a complete boomerang down to that breakout area. If it did come to the boomerang area and held, I'd be all over it. But that is looking a little sad at the moment. Um, However, it wouldn't take much if that turned around above 130, 135, then that could pop. So all the time this is consolidated. If this is a bullish consolidation, I think the consolidation will be over around about 120, 125. And then if it then picks up a bid, this could fire up. So back to the pen again. Yeah, well, keep an eye out for 115 and 125. It's very hard to be more specific at this stage. So you saw all this position building, all these volume spikes, and then we break. So far we've done a 1, 2, 3 wave up there. We may need to do a little wriggle down before that picks up a bid and then potentially picks up again. This 125 was crucial on that move to 135. So it could be 125 is the key again. So 125 is my best reckoning at the moment. It might well come down to 115. Right. Look at copper in a minute. IGG, that's one I did scan the other day. I saw that come up on a broker's. Oops, that's the wrong one. That's the contract. I don't want to look at the contract. I want to concentrate. Right, where are we? Oh, looks like I'll have to look at the. All right, I'll have to look at the December contract. Yeah, a lot of support down there. So assuming the main stop looks like this, we're coming into a lot of support down there. If you're patient, if that comes into that support holds, then and we subsequently break the highs, then IGG could do well. Let's see if I can find IBM. Oh, yuck. Um, Keep an eye out for 163, but if not lower. I could see that coming into 160 at the moment, unless that turns around quickly. Copper, and then I'll finish up. Yeah, coming to support on volume. Reminds me of gold. This looks very much like gold. Let's update the ratios. Let's take that off. Yeah, so this low today was an ambush support. It's up there at 44.38. It's a decent buy here. I mean, if you buy 45 and that with a stop underneath these lows, if we can get back, if we get bid above 52, then you look at 55, 60. So I think it's worth a move. This is a three-wave corrective pullback. So huge move. Pretty much sort of a 1, 2, 3, or a 1, 2, 3, 4, 5, 1, 2, 3. Yeah, that's so that completed a 5-wave there, and then so we just completed a 3-wave pullback, and we're holding. So if you can bid 45, stop underneath these lows, and stay in the trade, you could start another move back into those, break those highs. Brilliant. All right. I'm going to leave it there unless you've got a burning question for me. So be careful. Indices are showing tiredness at these highs. There's actually having said that, the Dow's just picked up off the floor, right? It just shows you uh, that's a Dow on a daily. Okay, so if we close well today, then and break the non-farm payroll high, that could continue. Yeah, close, but this is the 50-day average. So if we close today on the 50-day average, that's bullish. But there are a lot of issues, technical issues around this market, so be careful. An ideal place to short this would be somewhere around, or short term, somewhere around the 40K mark. If we get a lower high into 39 and a half, there's a ratio there, 39 and a half. A lower high into that would get me short higher up. Otherwise, I am testing highs at this stage. I'm testing with sells at this stage. Come on. Just looking at S&P before we go. Yeah. So I'm probably slightly underwater in that short. Just looking to see if this resistance area can give way. Brilliant. Thanks, guys. Thanks for coming, and see you again soon. Bye.